Let's welcome in Ed Yardeni. He is the president of Yardeni Research. Now, Ed, you got to help me out here because I'm a little confused. Sure. Now, when we talked the other day, and maybe it was late last week, I thought you were making the case of why people were too negative and that why we weren't going to have a recession and why you were more positive than most. And then today I find out that you lower your estimates for earnings, sure, which you said were going to hold up, and then you lowered your target for the S&P 500 to your range to 3825 to 4335 from 42 to 4800. Why?
Well, I'm really looking at this year and next year. I think there's a lot of pessimism about the next couple of years. And I'm thinking that we're going to see that the economy hangs in there. I did raise my outlook for a recession from 30% to 40%. It's not the most likely scenario yet. But I do think that looking into next year, we're still going to make a new high in the S&P 500. But I'm realistic here. The reality is the economic numbers that we've been getting have been weak. The housing numbers were extremely weak yesterday. This morning's durable goods were actually pretty good. But the business surveys for New York and Richmond and Philadelphia are looking very weak for May, which means we're going to probably get a very weak purchasing managers index.
Let me ask you this. Why isn't a recession your base case scenario at this point?
Well, I still look at the consumer and I see that the labor markets continue to be very strong. And in addition, consumers have accumulated about $2 trillion in excess savings over the past 2 years. And we are actually now starting to see in April data, M2 come down and demand deposits coming down. So that does suggest that they're dipping into some of this excess liquidity to keep spending. And then I look at the business sector, and I'm encouraged by today's non-defense capital goods orders. They were up at a record high. I think companies are going to do what we've discussed before, and that is continue to spend on equipment, particularly on technology, to increase the productivity of their workforce, which is really what is my longer-term underlying optimism is all about. I think some of the really bearish people are looking for this situation to continue well into next year. And I think what they're missing here is that productivity will come in and lower help to lower inflation.